Now, government borrowing money and spend, everybody in Europe looks, of course, at the fiscal cliff in the US, and this is exactly what Europe tries to avoid. So we are in a situation where we have a deleveraging process on a private level, but also on a public level. So again, my question is, you think that in terms of the borrowing activity, Europe should go down the same line as the US to spur growth, and once growth is back, you can start deleveraging on a public level?
The United States looked at the Japanese situation and realized that when the private sector as a group is not borrowing money, even at zero interest rates, government must borrow money. That's why Chairman Bernanke of the Federal Reserve, many others came out and warned American lawmakers, do not fall off the fiscal cliff, meaning premature fiscal consolidation. And we in the United States came mighty close to it. There was sequester, there were government shutdown, and debt ceiling arguments. But the United States managed to stay away from the fiscal cliff, which is why 5 years later, US economy is doing much better than in Europe, whereas European economies all fell off the fiscal cliff, and there's not a single political leader in any of these countries warning about fiscal cliff, even though all the countries have already fallen off from it.